Welcome to the Stockscores Market Minutes for October 3rd, 2011. Before I get started on this week's presentation, I want to remind everyone that my weekly newsletter is free and is always free. You can sign up for it at www.stockscores.com/newsletters.asp. The address is there on your screen. If you sign up for that, you will get my newsletter each weekend where I pick some stocks, do some analysis, help people develop their trading skills. All right, let's get started in the presentation then. This week we're going to talk about a few different topics, including my trader tip, which will focus on the difference between alpha and beta stocks. We'll do some chart analysis to give you an impression of where these markets are going and ultimately provide my outlook for the markets going ahead. All right, so let's talk first about alpha and beta. Every stock has some correlation to the market. We call that the beta. A stock with a beta of 1 will go up 1% if the market goes up 1%. A stock with a beta of 2 will go up twice as fast as the overall market. Now, the alpha component of a stock's performance relates to that stock specifically. So in a market where the stock goes up 1%, if the market goes up 1%, we would expect the stock to go up 1% if it has a beta of 1. If that stock ultimately goes up 9%, then it has made an abnormal return of 8%. We refer to that as the alpha. Now, as traders, we want to always look for alpha. But in this market, there really is no alpha because stocks are so heavily correlated to the overall market. And it makes a market very different to trade than normal. Now, normally I'm always out looking for alpha, but right now I'm really focused on just trading the market in general because the overall market is so abnormal itself. And that would be my real tip for the week, is to focus in on the index and inverse index ETFs, because right now that's what's working very well, and I've made quite a bit of money in the last few weeks doing exactly that. All right, so let's start off by looking at some charts. This is a chart of the S&P 500. It made an important breakdown today through support. It closed at a new low for the year and really broke through the support that has held it throughout the last few months. So that's a big breakdown. Now, given that we are in a downward trend, you can see there I've drawn a downward channel, the market is generally pessimistic. I think that we could see a little bit of a bounce back in the short term simply because the market has fallen for 4 days in a row. But ultimately, I think this market is headed lower now that that important threshold has been broken. The Canadian market is in a little bit better shape because it hasn't broken through support. But with that said, it also is in a pessimistic downward channel, and therefore we want to be avoiding the purchase of stocks right now more heavily on the short side, although again, it's easiest to do that right now through the index ETF. So I would be pretty much out of stocks in terms of ownership. I don't want you to be in stocks right now in the Canada or the US market unless you are, day or swing trading. That's really about the only place that there's an opportunity. Gold is interesting because it has retraced back to its long-term upward trend line, and the recent losses will make many investors feel like the party is over in gold. But in fact, it is holding that long-term upward trend line and has bounced off of it quite nicely. And so I think that gold is the one place where you can find a safe haven right now. If you are looking for individual stocks, you might want to look at some of the gold miner stocks, which are doing better than the overall market. The oil market is also pessimistic. We have a downward trend in oil. We are moving to new lows. Until that downward channel is broken, you want to avoid the energy sector. So to summarize then, I am pessimistic on everything but gold. I think you can trade gold itself, or you can try to trade some of the gold stocks, the gold mining stocks, but you have to be pretty cautious there as well, because even those gold mining stocks will have some correlation to the overall market, which of course looks pretty ugly right now. Well, that has been the Stockscores Market Minutes. Again, if you want to register for my free weekly newsletter, please do so at stockscores.com/newsletters.asp. It is free and always free, and we won't send you a bunch of spam mail, just the newsletter each weekend. Have a great week in the market, and trade well.